All right, everybody. Welcome to another interview, Trust Engine Mortgage Coach. I'm interviewing David Lykken. It is we're like 10 days till the end of the year. So we are wrapping up 2023. We're going to call out a few of the most notable things that happened this year. I've got one big thing on my mind that I think 2023 will always be known as, but there's really a couple. And then we're really going to focus on what's ahead in 2024. David Lykken is to say he's an industry veteran would be an understatement. How many years in the mortgage industry, David?
Only been at 50 years, just 50
Oh
years.
my God, 50. I've been doing this for 38 years and I always feel like I am just this, senior guy. And to hear that you got me by a decade.
Well, I'm not sure it's something to be proud of, or
It is
but it
something to be
is,
proud of, my friend.
yeah.
It's
Well,
to have.
yeah, yeah. It's an honor to be in this industry. It's an industry I love. I love what we do. I love what this industry stands for. So it's really a joy. And having been around that long, I have a unique perspective because I've seen a lot of history, David. So I think, are we seeing history repeat itself? Or are we seeing some new things? So I'm looking forward to this conversation today.
Yeah, and the other thing I would say about David that to me just always distinguishes him is he is curious and hungry as ever for innovation and change. Sometimes people that have been doing something for 50 years or even 10 years or 20 years, um, they just don't have a passion for innovation like David does. He's always introducing me to some of the newest technologies, some of the newest ideas, what's coming next. So David, let's just real quick recap both of us, what we think are two or three of the most notable things of 2023. And then let's flip into what are some of the biggest trends and some of the most important things for both loan officers and mortgage executives to pay attention in 24. So you
Yeah.
go first.
Well, number one, everyone knows that this has been the most significant downturn of mortgage volume in the history of the industry. I've been at it again. We talked about it for 50 years. That just gives me a perspective knowing I've been at it, looking at it for a long, long time. So most notable is the reduction. And it came as a bit of surprise because I think a lot of people went into 2023 with some optimism, certainly not with the pessimism that we're going to see the significant drop that we did. There were some that were saying it, but this one was far more substantial. Now, what has kept many companies alive is the amount of money that was made in the previous cycle. So, what has also been surprising is there has not been as many companies going out of business to this degree. So that has been a bit of a surprise. Surprise was biggest drop ever. Another surprise is it hasn't wiped out as many companies. Now, if you look in the coffers, you go like, not a lot of fuel left in this tank, but hopefully we're going to see this recent rally is going to allow them to refill the coffers so that they have more fuel to continue their journey.
Yeah, I'm always surprised at just how resilient mortgage industry is, both loan officers and mortgage executives. Well, why don't we go back and forth? I'm going to call out two things
Yeah.
about this year. I mean, I think this will always go down, and what I'm going to say next, it goes beyond the mortgage industry. But this is the year where everybody really got to see AI in action. The AI movement started, many years ago. But in terms of the, regular people seeing ChatGPT, like say a few words and see what it could do. Like this is the year that AI came into the commonplace. Any thoughts on that?
Oh yeah, it's no question about it. When you said the that Chat GPT launched just a little over a year ago, and like you said, AI has been around for since the 50s. It's been around for a long, long time. It's the computing power that we now have present with us, with the way our technology stacks work, where you can really take advantage of the things that we have been developing. The inhibitor to AI developing more quickly was the computer power, the cost of computing power. And now that has all come down to the point where it is actually happening. And boy, talk about something that has already begun. And this is just in its infinitesimal stages of growth that's happening, because we're going to see this literally change our industry. And I think it's going to change it for the better and for good.
Yeah, well, it's changing everything. I mean, I'm doing this interview right now. I'm using a new piece of technology called Fathom AI, and it's listening to this call, it's making notes, it's going to make this conversation more actionable. If I do want to create some micro content from this interview, it'll make it faster and easier to just be a more valuable modern executive. Now again, you got to play the game, you got to use the tech in order to get the value, but there's no doubt. And then the other thing, last year was the first year where we started the year and 63% of all mortgages started with 2 or 3%. And we had just a historical rise in interest rates. They actually got into the eights. So think about that, everyone. Just like really think about 63% of mortgages start with 2 or 3%. And in that same year, interest rates actually got into the eights. And then the other 20% were under 4, started with 4. So literally rates were double what 80% of Americans had as a mortgage. And so we started the year in that landscape, and it just got tougher and tougher and tougher, and rates just got tougher and tougher and tougher. And now here we are in December, and rates are starting to come down. Neither David or I are market forecasters, but I interviewed Dan Rawich, our chief economist, on Friday, and he predicted, well, I don't know he predicted, he made a case for how it's very possible, even likely, that rates could get down to 5.875 by into Q1. Any thoughts or comments on that?
Yeah, I have. And Dan is a great. Yeah, you're right. He's not a forecaster, but he is builds really solid logic on that, and he does do forecasting. I guess I should say correct.
Well, he does. I don't.
I mean, you don't.
I
Yeah,
said
yeah. No,
I
Dan
don't.
does.
He
Yeah,
does.
yeah, yeah.
He
Yeah.
is
You and
pretty
I,
much our chief economist.
yeah, we get a chance to talk to the Dans. In my department, in our company, we have Les Parker, who is really good, and then of course we have close relationships with Doug Duncan. And Les has adamantly been saying for some time that we will see interest rates, the 10-year Treasury, drop below 4% before year end, and everyone's calling him crazy, and it happened. And he's saying that we could see. The mid threes before. So while Dan's saying we may see the upper end of that, I had Les is saying even
Well,
more so.
remember, Dan is saying 30-year mortgages, so
30-year
10-year.
mortgage. Yeah,
And
yeah,
yeah,
10 years.
yeah, he's
Yeah,
saying
yeah,
30-year mortgages. And by the way, Dan also called, where 10 years at, he
yeah,
called that. I think the biggest issue right now is just the yield curve. And can
yeah.
we get to a more, a normalized yield curve? Because if
Normalized.
we
Yeah.
had a normalized yield curve, we'd be in the fives today.
Yeah, we would be. There's no question. And I think there's the factors that are contributing to it. You look what's going on in Israel and the Gaza Strip, and what's going on there. There are so many geopolitical forces that we could see um, influence things. The flight to quality will continue to have a downward pressure on this. We're in an election year. That has got a downward pressure on things. So we're going to see a favorable time to be in the mortgage business, not compared to the lowest of the lows, but I mean, in a very favorable place. We still have the housing inventory issues, but I think we're seeing enough life circumstances show up. And as you start studying life circumstances, divorces, deaths, and all the things that cause for someone who doesn't think they're wanting to give up their 2 and 5 ace mortgage rate, are really forced to do so. And that is going to be something that is going to be increasing more so in 2024. The question is, what are we doing to make sure that we're positioned to take advantage of this? Now, this starts going forward into the new year, but I really do believe we're going to see builders increasing that. You look at the builder confidence, you look at the number of housing starts. I think we're going to see a nice surge in all of that. So new supply coming on market. Some of the older supply is also going to be coming out of the market due to life circumstances. I'm 73 years old. I think I'm going to live forever, but I'm recognizing there are moments where I wake up in the morning that maybe I don't need this big house. Maybe I don't need all that we've got. So all those things that will be changing. So a lot of people would love to have my house, but we'll see.
Yeah. So you started to get into a little bit of, what to expect. And let's really, if something else comes to mind around like highlights from 23, call it
Sure.
out.
Well, I
But
think
let's
you hit
really,
the
let's
major ones.
focus the rest of this conversation on what's coming. And you said a better year is coming. And I
Yeah.
also agree. I hope this conversation and podcast ages well. And we don't have mud on our face at the end of 2024, but I am gonna predict that this is a more successful year for both lenders and loan officers.
Yeah.
And I do believe we are in a place where it could be an incredible year. Like we can
Yeah.
really,
Well, I
usually
think,
when things get bad
yeah.
fast, they get better fast.
Yeah.
Thoughts on that?
Yeah, well, you and I recently been talking about the importance of mindset, skill set, and activities. I mean, and once you cover what I'm doing a better job is bringing your interviews to our listening audience. Our listening audience with Lykken and Lenny has a tendency to be more of the C-suite executives or the people that run the companies. It's the audience, and I want to make sure that we showcase the loan officers that are being successful out there because there are many that are doing well and had a very decent year in 2023. And why is it? It's because they had the right mindset, they had the right skill set, and they just increased their level of activities in order to be able to get the volumes up. So we're interviewing some. I'm just looking forward to hearing and sharing more of your stories and the interviews that you do there. So a number one thing is that this is going to be a more positive environment. It's going to help people put themselves in a better place. What do you do with that? Do you stay with the company you're at? Or do you go out? We're seeing people moving around. There's no question there's a lot of movement. That's going to continue to happen. But where do they move? More and more top loan officers are looking at guys who are now market leaders in the marketplace. And they say, they started as a loan officer. Maybe I too should look at starting my own company, which is an interesting one of the early trends we're seeing as we go into the new year is the number of people contacting us right now to say, Lykken, I've been a successful loan officer. I have this much net worth, and it's impressive, David, significant net worth that I want to go and open a company. Well, you've done this for other companies like Movement Mortgage and many others out there. Will you come and help us build a successful mortgage company? That is a trend, I do believe. So what do you do if you're an owner of a company and you have one of your top people want to break away and start a company? I don't think there's. I mean the dream of home ownership as well as the dream of owning your own company is that is very much a dream, and it's something they should pursue. I tell you this. It's not all that it's cracked up to be. And so what I spend probably anyone who's contacting me to start this journey to open their own business, I really challenge them. Why are you doing this? What is your why? What is your purpose? If it's, well, I can make more money, I almost certainly will tell you you'll fail because there's enough headwinds out there. And there's certainly times where it gets much leader than you realize. But yes, you do have the greater upside. You do create value. And if you have a company where you can get a Fannie Mae, Freddie Mac, and Ginnie Mae approval, that's a real advantage. Another thing on that point, David, that I might want to note that's really interesting is the number of private investors that are coming into the market. We've always had the hard money, it's oftentimes referred to as hard money or quick money, or you can get a loan quickly, first mortgage or a second mortgage, and to fund some need that you have that came on suddenly. That is opening the door. That is happening and continuing to grow. Number one. Number two is we're seeing a number of people coming to the market with new investors that new products that have not existed before. Their plays on other products that we've seen. Someone said there's nothing new under the sun, but I think we're going to be seeing some new non-conforming type products that are not going to go down the destructive path that we had in 07, 08 that brought us to the brink of an economic crisis globally. It's not that kind of products, reckless, irresponsible products. It's products that are going to allow for greater flexibility in qualifying, and it's going to expand the buyer box, the number of people that can get into a home. So I see that as a very big positive and a contributing factor to this next year being a very good year.
Yeah, no, I agree with you. And guys, anyone listen to this, make sure you're following David Lycken's podcast. He actually interviewed me last week. That podcast should be out soon. And David, thanks for
It's out already.
asking
It was
me.
released last Friday. It was released last Friday. And
Oh,
yeah,
there'll be a link down
yeah.
below.
Yeah,
There'll
we'll
be a
put a link
link
in there.
down
Yeah.
below, and I'll need to make sure I promote that on social media. I actually had not seen that yet. And
Ah.
he asked me a lot of questions around what do I think are some of the interviews that I've done that people should really pay attention. I'm going to go ahead and usually I release the top 10. So some years I pick 10, some years I pick 12. One year I picked 15, but like out of the and literally over 100. I'll actually have to figure out, Paul, if you're listening to this, how many interviews did I do last year? Definitely over 100. I don't think it's over 200, but it's a lot. And I'm going to tell y'all right now who the top 12 are. The actual LinkedIn article will post in a couple days, but I want to call this out because I think it helps me share some data on what happened this year, and it also helps me really bring clarity on a couple big trends that I see. So first of all, the number one interview of the year was someone new, Phil Jones, the author of Exactly What to Say. And actually, Scriptapalooza is usually number one or number two. We actually had a mistake when we uploaded it. And that first video got like 3,000 views, and then we uploaded the fixed video and we got another 3,000. So it would have probably been number one if we wouldn't have made a mistake. But Phil Jones was on that too. He actually helped moderate that. But here's a couple takeaways. So look how many videos had the word realtor in them. Dan Keller, realtor. Dan Keller again, how to set meetings with realtors. Jeremy Forcier, realtor playbook. Brian McCauley, realtor partners, realtor. Like the number of videos that were about winning with realtors, it was like half of them. And so I do think coming into 2023, last year I said every realtor has never been more recruitable, and you've seen loan officers, change loan officers. I predict that to be the same, if not accelerate in 2024, between the commission shifts that are coming.
Yes.
And I just think you're going to continue to see that. What are your thoughts on that, Dave?
Well, I think one of the things that we probably should have covered in reviewing 2023 were the lawsuits and that have come out.
You're right.
Two of
You're
which are
right. We
very
should have.
significant. Now, what is, from my perspective, was a bit surprising is that the National Association of Realtors did not race to a global settlement, which has opened the door for a lot of law follow-on Me Too lawsuits. They're appealing this, so they're taking the path that we think we can win through an appeal process. That is going to be decided somewhat in 2024, possibly even outside of beyond 2024. So, number one thing there is that what is clear is realtors need leadership. We all need leadership, but I believe that lenders are uniquely qualified to provide leadership. And so 2024, not only are you, it's so good that you pointed out the realtor common denominator in all those top interviews. But David, I really believe that it's us going and partnering with the realtor and helping them see what is potential out there. Number one thing is we all, including the buyer agent realtor, need absolutely to be doing a better job of building a more compelling proposition of why you should pay them 3%. They need that coaching. There's so many things that you can do to help. And we as mortgage professionals would provide a great service to the realtor community by helping them articulate that, coaching them on how to present a value prop, their value prop.
Yeah, no, bullseye. I think for any loan officer listening to this, I mean, this is just an incredible year for you because we're going to have friendlier interest rates. So there are going to be some refis. We're gonna see lower rates, which will help the purchase business, and realtors are still under more stress than ever. And so if you can help, like, hey, I can not only help close your loans on time, but I can help you bring more value to the consumer. That's going to really resonate. which by the way, this kind of leads into my other point. One of the top interviews, usually when I do C-suite interviews, content that's for
Yes.
the C-suite, it doesn't make it into the top 12. In fact, I do think a Mitch, back in TRID when compliance was a thing, I think a Mitch Kiter interview made it into my top 10 interviews.
Yep.
But aside from when, the year that TRID came out, C-suite content's never made it into the top 10. But Jim Deitch made it into the top 10 with Moneyball Mortgage, over 2,000 views. And, and that was all about being data driven. It was all about being data driven to improve profitability. And it was about being data driven to improve profitability by improving conversion and improving the efficiency and profitability on a per loan basis. And I think that's going to accelerate this year. What are your thoughts on that?
No, there's no question. If you're not looking at it, you must be looking at it, because the cost of originating a loan got up over $13,000 per loan. And that has now come just below that with the increase in volume just recently. But that has got to be addressed. There is such an opportunity for an outside influence to come in and manufacture mortgage loans in a compliant, skillful way at a fraction of the cost. We have clients that are half of that, less than half of that cost, including the mortgage loan originator commission in there to originate a loan. So that is the big opportunity. One thing, David, that we didn't talk about was another lawsuit that took place, or that got a hearing, was at the U.S. Supreme Court, was the constitutionality of the funding of CFPB. That was
Oh
heard
yeah.
in fourth
Yeah.
quarter. That the results of that are going to be announced sometime first quarter. We're going to have the ruling on whether or not CFPB's funding mechanism is legitimate. I did do a top podcast. By the way, we were just awarded, or not awarded, but we just, someone ran a survey, and we were one of the top 5 mortgage podcasts in the world. So we're in the top 5, and I think you should be right up there. And I'm going to share the metrics with them about you, because I think you should be one of the top ones out there as well. But anyway, we just got that. And one of the top podcasts that we did this year was an interview with Mitch Kiter. And while it was started out on the lawsuit that was happening up in the Chicago area, or Indiana, I think, we actually got into the CFPB. What Mitch has said in that is he does not see that CFPB is necessarily going to go away per se, but the funding of that is going to get seriously revisited. So we're going to probably have a different mechanism by that. It's scary. The MBA put out a brief that said, we highly recommend, no matter what happens to this lawsuit, and many do believe that the ruling is going to be that the CFPB's funding was illegal, that if that, in fact, that really happens, the MBA came out and says, please do not undo all the regulations that have been in place, because the regulations, we don't need to create a wild, wild west where there's no more sheriff in town. We do need a sheriff. We need to be a reasonable one. So I think that's a reasonable position to take, but be prepared to first quarter. That could have a significant ramifications out there. Again, hopefully it'll be pretty much a non-issue. We'll just have different funding, just like the realtor issue would be a non-issue, and get back to business as usual.
Yeah, I interviewed Mitch a couple weeks ago as well, and I didn't ask him about that, but I did ask him about the Realtor lawsuit, and how fast he thought that would come into play, and he said it's going to happen sooner than everybody thinks, and
Yeah.
and when I really drilled down on that, he said by 2025, I think things will have been implemented and change will have happened. And my takeaway for that is, if that's the case, then 2024 is the game. Like if you're gonna turn that chaos and turn that shift into an opportunity, like this year is the year to do that. Any thoughts on that?
Yeah, well, first of all, I think you're spot on. The number one thing we have to do is, what are we about? We're here to serve a consumer that's wanting to buy a home or refinance a home. If we don't get distracted by all the noise out there, we're going to have a much greater probability of doing very well. So, number one thing, pay attention to this podcast, what you're listening with, what Dave puts out on a regular basis. It'll help you get your mindset. It's important to know the issues that are going on out there, but don't get so caught up in it where that you are getting distracted from doing your number one job, and that's let's provide service. Get out and sell and provide a great high quality service. I think this is where artificial intelligence is going to actually enable the loan originators that can take advantage of it to do much better as a result of an AI empowered loan originator, because it gets us and allows us as loan originators to do the number one thing, and that is relationship management.
Well, let's riff on that AI powered. I want to add a few more words just to describe who I think the loan officer of the future is, and really the loan officer of 2024. They are AI enabled, they are data driven, and they are not just loan officers, they're advisors. So AI data driven mortgage advisor. The future belongs to them. And I do believe, not believe, I know to be fact that 2024 they'll see the results of that. I mean, we've rolled out our borrower intelligence platform now with 7 different, very large lenders, that just the way we're using AI and we're using data to predict borrower needs so we can get to the borrower faster, in many cases before the borrower knows they have needs, before the borrower is actually in the market. And then we can anticipate the type of message to deliver advice to that consumer, so that we're not just pitching loans, we're showing them how to achieve financial freedom faster. We're showing people how to achieve, healthier home ownership. Like, it's here. What are some other AI? Let's just unpack a list of AI tools and data tools.
Yeah, number one, we already know how AI can help in a way we communicate with a buyer, or with anyone we're doing written communication. That's, we've all realized that recently. Run an email, run your text that you're doing, and put it into Chat GPT and get the suggestions back. We all have been doing that this year. We all been using that tool effectively from that standpoint. The thing that is really coming around that is finding more programs, down payment assistant programs. AI is coming out and helping us in a big way select the right down payment systems, make us aware of programs we didn't otherwise realize, the ways in which you can qualify borrowers. AI is getting more and more impactful on the way loans can be underwritten. What documentation, analyzing the data that's more quickly. We're seeing 2 significant developments. I'm seeing a lot of products come out that are, David, I would call incremental AI. They go and attack a piece here and there, here and there. And there's one particular product, Angel AI, that Pavan has created, that is a tectonic shift. It is, if it comes to fruition, it is, and I believe it has a very strong potential of doing it. I'm thinking of a movie, Tucker and the man, Tucker and his Tucker the Man and His Automobile, and it's a great movie about how someone came on and reinvented. I haven't even watched it. It's a great movie for everyone to watch.
The one with Jeff Bridges, Tucker.
Yeah, it's the one with Jeff Bridges on. Yeah,
yeah, it's a good movie.
I just downloaded my iPad. I'm flying to Seattle tomorrow for Christmas, and I'm going to be watching that on the airplane, because there's some lessons in there I want to go back on. When you start making tectonic shifts and how you do it, which Pavan has done, I think there's opportunities and risks in doing so. What can we as an industry tolerate and accept? Incremental shifts or a major tectonic shift? What Pavan is doing in Angel AI, and certainly everyone needs to do it, they'd be looking at this. And you could do it with the case, Pavan's case is you can do it at no cost. You can go sign up at Angel AI, get an account, and start using it for free. And use it for the underwriting. All these things we're talking about, there's no cost to do that. And I believe those that are doing the freemium, offering something of premium value for free, which is what Angel AI is doing, is going to have a distinct advantage in moving the needle when a lot of this comes to really fruition. And so 2024 is going to see an explosive growth of artificial intelligence in so many areas. Question is it going to be a major shift, or is it the winner going to be through the incremental pieces that we're just adding here and there?
Yeah, there's so many different AI tools. So first of all, anyone listening to this, we'll put a list of some of the AI that we mentioned during this call, and some of the biggest stories in technology, which I think Trust Engine and MortgageCoach is certainly one of those. And then I just want to remind people there's a lot of, just small ways of using, AI. I mean, Chat GBT, I have, really built some rhythms and habits around that. I know they have some competitors. I haven't played with those as much. I'm using a note-taking platform called Fathom AI right now, which has just
Powerful.
taken my note-taking to a whole new level. And one of the cool features I like about it, Dave, is it will tell me what percentage of the talk time. So like I know I'm averaging 44% of the talk time in this conversation. If I talk for over 90 seconds, it calls it a monologue. And it kind of like it lets me know that, hey, you're kind of going on now. So it's just going to be very interesting to see how all this technology just helps us be more effective communicators, helps us create better content, helps us take action faster, helps us be
Yes.
more predictive of borrowers who are ready for a loan, helps us, the loan manufacturing process and underwriting more efficient. So I definitely think this will be a year of real technology innovation and AI. By the way, I just got a monologue alert. I'm a minute and 37 seconds. Hey, what are your thoughts about this credit report news and the fact
Oh
that credit
man,
reports costs
this
are
is
going up
good.
like 5x next month?
Yeah, it is. That is a real problem. It's presenting a number of issues. It's creating opportunities. For example, if you look at what the Work Number has been charging for out there, great company. I just interviewed Joel Rickman, who's the president of it. Great guy, great company, and they've done a phenomenal job. But then you have a new company out there, True, TRUVE, TRUV come in that does it for 80% less cost. So when you see costs rising like that, to a degree, it's putting the challenges on the incumbent, the market leaders, the Work Numbers. They're going to have to be dealing with some competitors. They're going to have found a way to do it better, faster, cheaper. Now, I don't know if it's better. They report that they're better. And I think that that's a significant one example of actually naming names out there. Again, I have respect, tremendous respect for the Work Number and what they are doing in services, and for the leader there, tremendous respect. But I think we all know how good you are. I think this goes to Stefan Elop, who used to be the CEO of Nokia. His famous quote, Dave, he ran the most successful cell phone company on the planet. They had over 85%, if my data is right, 85% market share. I mean, if you have 85% market share, you'd say consider yourself a successful venture, no matter what category you put yourself in. His famous quote is, "We didn't do anything wrong, but somehow we lost." They lost to a new, innovative, less expensive technology called the iPhone. That's the year that they suffered the greatest market shares, when Stephen Jobs went on stage. And you look at the explosion of that. I think we're at one of those shifting places where right now there's a market shift where a new devices are coming out. It's artificial intelligence that is going to have the same impact on what the old mechanisms, and because we're going to have so much more packed into our technology, and better get on board with it and understand it. So he didn't do anything wrong, but somehow he lost. And that is a statement that many are going to say. We executed well. We were a top lender, but we somehow lost. Why did we lose? We lost market share because someone did it better, faster, cheaper. And if that's going to happen, it's going to be done through technology.
Yeah, well, let's go into some closing thoughts here. So, and this has been great. I'm actually gonna write some LinkedIn posts around some of the takeaways you've shared. But let's, if there was a loan officer or a head of production or a branch manager, let's like really give some advice from the street, because it's not often you get interviewed in this format.
Yeah.
But any specific tactical suggestions, word of advice that you have for, just call it the sales part of a mortgage company? Any closing thoughts you have?
Well, number one, I think we all have to go back and visit. It's year end. We're all doing our planning for the new year. And I think it comes back to visit your why. And I love the fact that you got Simon Sinek on here, and you did a great interview a number of years ago with him. And I think it's really number one, we've got to get back to why are we doing what we're doing? The basis for why we're doing it is going to propel us into success or failure. And if we're doing it to serve others and be this, I mean, you and I both do our podcast, not because we make a lot of money doing it. It helps our branding, it helps our deal, but we're here to serve people, David. And that's what I love about you. And that's one thing I want to be known for, is we're here to serve well. So number one, figure out what your why is. Make sure it's about serving the needs of others. And then how are you going about it doing that? What's going to make you more successful if you can use technology to leverage your why, leverage the services you provide effectively at a greater rate. That is going to position you in a powerful way for 2024.
Yeah, I love that. I've been doing a series of interviews that I call Purpose and Profits.
I love it.
And
Good.
you know,
Great
and
title.
yeah, you like that?
Yeah.
And I mean, I've been a for-profit entrepreneur, my
Yep.
entire life, but I've always had a purpose that goes beyond the transaction, and a purpose beyond, just like with Mortgage Coach and now Trust Engine, it's financial freedom lending. It's helping consumers use a mortgage and use debt to achieve financial freedom. And I do believe that when lenders and loan officers, they use a total cost analysis, they can really help. And now First Home IQ is a true nonprofit to help Gen Z and the next generation be
Yeah.
smart around homeownership. And I do believe that if they're smart and they're educated and they're inspired, they will achieve homeownership younger and faster, which I think is an advantage in life. Any predictions on just housing and real estate over not just the next year, but
Well,
over this decade?
I'm shocked at continue to see that housing values are at a we're about to see the collapse of housing property values or pricing is in America, and I just don't get it. I can't imagine a scenario because you go back to basic economic principles of law of supply and demand. We have such a pent up demand for a limited supply of homes. I just don't see any probability of a housing price collapse as some are predicting out there. So number one is don't listen to that noise. I mean, if you want to go listen to it just so you can speak to it, that's fine, but don't listen to the noise. Number one. Number two is, again, what we said here consistently throughout the day is make sure that you're focusing on how can you use the latest technology tools to your advantage. I love the stuff that you're doing. You just mentioned several of them, and I love what you are, Kristen, doing together to educate the next generation on home ownership and motivating them to doing, getting a vision, because many people don't have a vision for home ownership, and we've got to create that vision. And it's good for them, it's good for our economy, and I think it's good for society.
Yeah, well, I think all housing professionals, both mortgage and real estate professionals, we are the first responders in this financial literacy crisis and this affordability crisis. Yeah, there
Yeah.
is a new level of struggle in housing affordability, but it requires education. When there's a will, there's a way, and now people just need to be more educated on house hacking and different
Well, I
ways
mean, yeah,
of
down
achieving
payment
it.
assistance programs, David. I mean, I just found out about another
There's never been
down payment.
more.
There's been so many of them out there, and like the one in Florida is $15,000, and then if you stay in the home for 5 years, it's a silent second mortgage they put on the home, and it disappears if you've lived there for if you stay there for 5 years. It incrementally goes down after 2 years, and then 3 years, 4 years, and it's forgiven at the end of 5 years. You start looking at what that can do, and then you start putting what you and Kristen are doing and educating them on the various loan programs, what it takes to be required, how to have responsible credit score. It is just so many things. Get behind that kind of activity and support that make people aware and help build the dream. What did Zig Ziglar say? How to be successful is help someone else achieve their dreams.
David, so what are the best places to follow you on social media? Where can
Yeah.
people, follow your podcast? What are a few links that we'll put down below for
Yeah, first
folks?
of all, LinkedIn, David Lykken, Lykken. Everyone asks about that last name. It's a Norwegian name. It means good luck or good fortune. So Lykken, David. That's a Facebook, LinkedIn. LinkedIn is the one I use pretty much the most, where I'm most active. You can always reach me at david at tms-advisors.com, advisors, ORS. And you can always do that, or you can always, probably best, IM me uh, on LinkedIn. That's a lot of people do that. I love connecting with people and just
Well,
connect
dude,
because again,
your content is amazing, David. I mean,
of
your
course, Lykken on Lending,
curiosity.
the Lykken on Lending podcast. Of course, that goes without saying, but you put those links down there. So thanks.
Yeah, yeah, no, I will. And my two words, every year I go into the year, and usually I just have one word. This year I'm going with two words, and it's obsessed and it's impact. Obsessed with impact. And
I
and
love
and
it.
you seem to be the kind of person that is obsessed with providing impact, helping people every way you can. I felt that the first time I met you. I don't know how many years ago. It seems like a lifetime ago. You know who introduced us was Don Hennig. Do
Oh,
you?
you're kidding, Don, our good
Yeah,
buddy Don.
Don.
I forgot that. What an
Yeah, no,
amazing
it was like at
example.
an
I've got some.
NBA event or something, and
Yeah,
we were
yeah.
walking, and Hennig is
Oh,
like,
that is
"You
something
two need
I
to
got to
know
call
each
Don
other."
and thank him for it. He is such a dear friend. And talk about a great example of leadership. Man, he was an amazing guy. Still is. Still is. He's doing some other things right now, but I love that guy.
Yeah, no, I
Wonderful.
gotta reach out to him and just tell him how much I appreciate him. But thank you, Mr. Hennig, for connecting me with
Yes.
Mr. Lykken and Dave Lykken. Have an incredible holiday. For anyone listening to this, however you celebrate this time of year, happy holidays, Merry Christmas, and Happy New Year. Dave, appreciate you, my man.
Blessings, brother. Appreciate you,
All
man.
right, take care, everybody. This is a wrap.